Welcome to Trends with Benefits, a podcast by Van Eck with a forward-looking perspective. We explore new ways of thinking about the markets, investing, work, and life. Here's your host, Ed Lopez.
Welcome to another episode of Trends with Benefits. My guest today is Laura Morrison, SVP, Global Head of Listings for the Cboe. Laura oversees global listings business, developing strategy and working with issuers to list their products and overseeing market quality incentive programs. And prior to the Cboe, Laura spent 20 years in leadership roles at the NYSE. I'm really excited to talk to Laura because we've known each other for quite a while now, just through the ETF business over the many years now. Laura, I'm really happy to have you on the podcast, and welcome.
Thank you, Ed. It's great to be here. I'm excited about being a part of your Trends with Benefits podcast.
How was your summer? It's been kind of a crazy summer for many people. How did you manage?
Oh, it has been crazy, hasn't it? As living downtown Manhattan, I feel like I've been on the front lines for a long time. It's been outside of that, the summer's been pretty good. Busy from a work perspective and also from a personal perspective.
You know, because of the impact of COVID on people's lives and on the city, and from your perspective at the Cboe, how was it just kind of generally from a market structure standpoint and a trading standpoint? Can you characterize it?
Yes, I've been in the markets, as you know, for well over 20 years, and this was exceptional. I mean, I'm a student of market structure. I love it. Particularly equity market structure. I have been involved on many committees over the years to fine tune what makes sense, we believe, after certain situations have occurred. And we were all on the edge of our seats, concerned about would these parameters that we put in place, such as limit up, limit down, or the market-wide circuit breakers work as they were intended while they were happening. Essentially, for the first time, we triggered 4 market-wide circuit breakers, halting the markets in the U.S. in 8 trading days. I mean, to put that in context, the first time market-wide circuit breakers were hit and the last time they were hit was back in October '97. Essentially, what we wanted to see was once they're hit, a calmness returned back to the market to the extent that it could, and then a resumption that was swift but also orderly. And I'm happy to say that all of the analysis and reviews that we've had since then have proven that what we put in place, particularly past August 2015, worked. Back then, the circuit breakers relative to single securities, about 83% of those halts were exchange-traded products. In March, only 20% of the single stock securities were exchange-traded products. So that's much more in line with the typical percentage of trading that exchange-traded products have in our marketplace. But of course, Cboe's volatility index, also known as the fear index, I mean, that too was, while it's typically in the low to mid 20s, it spiked up to 84.26 on March 19th. I mean, hitting almost an all-time high. The last time it spiked that high was in 2008 during the financial crisis. So we're really going through a massive amount of volatility, but I'm thrilled that all of the reports that we've been looking at and analyzing, a significant amount of data, market makers were even more prevalent during March as compared to maybe a more normalized period of March 2019. There were more market makers engaged and involved, and we need those market makers. We call them lead market makers, who are assigned to particular primarily listed securities on our market to be present and provide that liquidity to make sure that your Van Eck securities that are listed with us trade in an orderly fashion. So we're just really happy about the results, despite all of that unprecedented activity.
Were there any new learnings or any areas of improvement that you guys are working on, or that the market is working on?
We're consistently working with our regulators in order to potentially fine tune. At this point, based on all of the studies that we've put in place, we really do feel like let's not mess with what worked really well in an effort to accomplish perfection. Of course, it's such a delicate ecosystem, our equity markets, that, when you tweak something over here, it impacts something over there. At this point, other than looking into some more details with regard to short sale restrictions, as it relates to the parameters that we've just spoken about, I think we're in great shape.
How does that work in terms of coming up with rules to kind of manage, protections for the market and whether it's limit up, limit down kind of rules? I mean, are you working with committees with the other exchanges? Does it take a while, or can the group act fast, kind of given a certain scenario?
There is the regulation, National Market System, regulation NMS, that was put in back in 2006, 2007. That changed much of what happens in our U.S. equity markets and provided a all electronic environment, if you will, on all of the exchanges in our country. Since then, we've been fine-tuning Reg NMS, utilizing, like you mentioned, the specific committees. So the committee of, if you will, the limit up, limit down committee consists of not only all of the exchanges, but it also includes FINRA. It also includes a number of advisors from many large firms, both on the sell side and the buy side. So it's definitely a collaborative effort whereby the SEC is always engaged in and participates in almost every single committee meeting. It's definitely a collaborative effort that takes longer than everybody wants it to, but it's as efficient as it can be. I have to say, our own Bob Brooks is the chairman of this committee. He is an expert in market structure for many, many years, and he's done a terrific job in continuing to move these conversations forward and addressing questions that are posed to us by the likes of Brett Redfern and others at the SEC.
Let's go back now to, I'd love to talk a little bit about your background. I mean, I met you when you were at the NYSE. I think it was at Ridex, maybe when we met as well, listing ETFs, things of that sort. But how did you get your start in finance? What was your pathway to the exchange?
It was an internship at my college where I just fell in love with the financial markets, more specifically equity exchanges, and understanding how they work. I was, in Michigan at the time, and working in this internship brought me closer to this environment. So I was so intrigued. So I set my sights on working on the floor of the New York Stock Exchange and managed to do it. Moved to New York in '93, then started on the floor of the New York Stock Exchange in '94.
Were you trading, or what did you do when you started work?
Yeah, I started as a clerk for a specialist unit. It was located in the garage at the time, Post 2. The name of the company was Adler Coleman, and they eventually changed their name to CMJ Partners, Coleman, Mahoney, and Jacobson.
And what was your earliest recollection of ETFs? Did you get into that a little bit later, or was that kind of straight away?
I love that. I love your question here, because by coincidence, when I moved to New York, it was in '93 when the first ETF was launched. And then starting in New York, I was learning so much more about what was happening at the American Stock Exchange, which is right across the Trinity Church graveyard from where the New York Stock Exchange is located. So I was fascinated and watched closely what was happening at the American Stock Exchange with the launch of these products. It wasn't until 2007, however, that I really delved into the ETF ecosystem, having been part of the team that was really starting to build the listings franchise on the NYSE ARCA platform.
And now you're building out a team at Cboe, or have you built out a team at Cboe?
Yeah, exactly. I had the chance to do it twice. Second time is always better than the first. Actually, the NYSE ARCA team expanded significantly when NYSE acquired the American Stock Exchange in 2008. So many of the folks from the American Stock Exchange joined my team, and we literally transferred all of the VanEck securities that were located on the floor of the MX to the NYSE ARCA platform, along with all of the other securities, hence garnering the significant sizable market share that NYSE ARCA had. So there were about 11 folks on the team at that time. And today we have a much broader, expansive team incorporating a number of different divisions. So on the sales side, there's 4 of us, but then there's the legal team dedicated to listings, the compliance team dedicated to listings, the comms team dedicated to listings and marketing, so on and so on.
And now I take from your prior answer about building a team a second time, you enjoyed that process. It seems like you really dig kind of getting into the weeds and building something.
That's right, exactly. Being very, very focused at Cboe on the listings of ETFs was most interesting to me. So essentially all listings efforts go into ETFs, not corporates, with the exception of our one corporate listed security, which is our own. And what really makes a difference is innovation. Innovation in this space is what makes and creates leaders. And essentially, that's what we've been able to do. The other aspect of innovation I'm very proud of is fine-tuning the lead market making program, fine-tuning it so that the lead market maker can depend on a specific payment per product if they meet the exchange obligations in that product. So essentially, it's a per product payment amount. So with that certainty, they can also inject that revenue into their risk models and provide even better markets on Cboe than they were in the past.
Can we talk a little bit about that for maybe those that are maybe not as in tune to what market makers do and why that's important for individual investors? Can you explain that process a little bit and why that incentive program is important?
Absolutely. What we're creating is the best market quality on any U.S. market for your end investors. It's important for your investor because we need to make sure they receive the best price they possibly can when their order arrives on our exchange. And it's a 3-legged stool. It requires the exchange, it requires you, our issuer, and it requires the lead market maker to all provide that quality experience. And the lead market maker, we expect them to layer the book with narrow quote and greater depth of market, meaning bidding and offering larger size on each side of the market in anticipation of the orders coming in, particularly important in very, very volatile times. We constantly monitor for the intraday trading of your securities. We have a very knowledgeable and proactive desk that's actually in our Kansas City office that will inform you of what you need to know. While you and I are recording podcasts, they're making sure that our securities are trading the way that they should. And they're being proactive and engaging with our market makers as well as engaging with your capital markets desk to keep you informed.
As you've progressed through your career, what have you learned about yourself and perhaps your management style, and that maybe perhaps that you wish you knew when you were starting out?
Well, 2 things. One is trust your gut, trust your instincts, always stick by them. When making a decision, it's really important to just fall back on who you are as an individual and what you believe the right thing to do is. Second, instill that on your team. Make sure that they too are making decisions that work well for the broader company and the industry, and not take a micromanagement approach, but take an approach where, frankly, I trust them. I know that they'll do what's right. That works so much better. And frankly, it's so much more efficient.
Yeah, it's better. You're better able to manage your own time if you can trust somebody to do something for you or create something for you. Do you think that's a secret to innovation? Or, how would you talked about innovation? How do you influence a team to be innovative?
I think more so the secret to innovation is having complementary and diverse skill sets. Having those differing opinions, not surrounding yourselves with people who just say, yes, I agree with you. Surrounding yourself with people who have a variety of different backgrounds and a variety of different skill sets so that everybody can benefit from them.
And talking about diversity has actually been a very big topic this year. I wonder what piece of advice you might give a young woman starting her career.
People always say, find your passion. It really is important. If you're finding that you're just not happy in the role that you're in, search out something else. And when that opportunity presents itself, go for it. you'll figure out how to successfully accomplish those new heights. Don't be afraid of, oh my goodness, this isn't the right time for me because I have all of these other distractions going on. Just go for it.
What do you think one of the biggest challenges leaders face today?
Well, I mean, it's important for leaders to lead with empathy. It's important for leaders to be inclusive, because right now, employees are feeling that their life is so transactional. They tend to pull away from the team environment because they just don't physically see themselves in that team. We're all working from home. So the need to be able to bring the groups together is really, really important, and to make sure that people on the team understand what they're contributing is critical to the growth and success.
Is it possible to be an effective leader over Zoom?
I think it is. Yeah, I do.
And the firm is still working from home. Are you guys going back anytime soon, or probably not until next year, or can you say?
What we've been doing is basically allowing the employees to set the stage with our return to our office. Essentially, we've been taking periodic surveys, and at this point, it is not until January where we may revisit returning to the office. But before we do that, we'll take another survey to see where the employees are in terms of their comfort level in doing so, or their desire to do so.
And you guys are now active in the European space, and so I can imagine you probably haven't taken a plane ride lately, and probably missed that opportunity.
No.
So how is Cboe participating in the European market?
So we have an extensive offering in Europe, and it's growing, I have to say. So Cboe Europe operates Cboe Europe Equities, with the largest stock exchange in Europe by value traded, in more than 6,000 securities across 18 European countries, including, of course, ETFs. Having that connectivity across all the countries reduces fragmentation and builds a sizable liquidity pool in each one of the securities. I'm pleased that actually VanEck was one of the very, very first issuers to list on our market. And it's grown tremendously in terms of the number of, if you will, lines that are listed on our market. In addition, Cboe, of course, offers market data, benchmark indices, and equity block trading platforms. We are also the leading trade reporting facility, it's called Baxter, reporting the majority of over-the-counter equity trading executed in Europe. Lastly, I'm super proud of the fact that we completed our acquisition of EuroCCP earlier this year, in and amongst the pandemic, and now plan to launch the Cboe Europe derivatives platform in the first half of 2021. So again, tremendous growth in Europe.
How big is the team in Europe?
We have about 100, just shy of 100 people that are located in primarily the UK, in London. We also have a number of folks that are in around various different markets that we build relationships, so the various countries in Europe as well as the UK. And lastly, a year ago, we launched our Brexit solution with a brand new market in Amsterdam. So this market is a regulated market and also offers listing services. It's a solution for our market makers, for our institutions, and for our issuers, again, to meet the requirements of Brexit. And we're really excited about building out that platform as swiftly as we've built out our UK-based platform.
So let's bring it back to the U.S. and our favorite topic of ETFs. What excites you about the ETF market in the U.S. today?
Our growth is tremendous. Now, I have to say, and this has been the case in the ETF space for quite some time, we're constantly reading articles about, the growth of the products that are listed and the new products that are launching. I mean, there was no slowdown, if you will, in product launches, maybe in March, but April 2nd, we were up and running with our next listing. Our previous listing was the very end of February of 2020. And then April 2nd, we listed the first semi-transparent product, which under the Active Share solution by Presidian, we listed that with the issuer American Century. And that has really taken off. There are a number of issuers who have launched in the space since, and across all of the products, there is just under 600 million in assets that have come into the semi-transparent marketplace, if you will, either under the ActiveShares platform or under the Fidelity solution or the T. Rowe solution. So we're really seeing a lot of interest in growth as asset managers who have never been in the space before and maybe focused on mutual funds only find that this semi-transparent solution is a good next step into the ETF environment. The difference that with semi-transparent, the main difference between the semi-transparent solution and the ETF as we know it, is the requirement for disclosing the holdings, disclosing the portfolio. The ETFs as we know it that have been launched since '93 have to disclose the underlying holdings every single day. The semi-transparent allows for that PM to only disclose with the frequency of similar to a mutual fund. So every 30 days or every 60 days with a lag. It just gives them more flexibility on the frequency rather than having to disclose it every single day. So with that, I mean, we know we have a ton of issuers in our pipeline as well. We've seen a lot of interest in this. I mean, we're speaking to over 20 additional issuers who haven't been in the space before. So that's exciting me, to say the least.
Yeah, it'll be interesting to see how that develops. I mean, I know there have been a lot of issuers that have been on the sidelines waiting for this, these technologies, if you will, to finally come out and be approved. In the ETF land this year, we're seeing, I think, record closures for some ETFs. Do you think at some point we've hit a saturation point with, say, traditional index-based ETFs?
Not at all. Product development teams are very, very active, and there's so many initiatives that resonate with today's investor, like ESG, for example, particularly in the US, where we have some catching up to do. I don't think we're going to end the year with more liquidations than more launches.
I mean, it's a healthy part of the business, right? To close the funds that perhaps aren't working, aren't garnering attention. I think we've learned over the years that that's an okay thing.
Yeah, totally agree. It strengthens our industry overall.
What's one long-term trend you see playing out over the next year or several years? It could be about ETFs, it could be about the business, it could be about anything, really.
Working from home. I guess
yeah.
That's front of mind.
And there's probably an ETF for that. I'm sure there is.
Yeah, I definitely see that as a long-term trend. There is. What do you see, Ed? I'm curious. What do you see as a long-term trend?
Oh, that's funny. I should really think about the questions I ask for myself. And I'm gonna agree with you. I do think that's interesting. I think that's probably one of the more transformative ideas, not really ideas, I guess one's transformative forces that are out there now, partly because there's a generational thing component to it as well, where millennials and younger people value different things. They value perhaps connectivity with family and time to work and time for having that balance, if you will. If you can work from anywhere in the world where technology has now allowed you to be able to do that, get your work done, why shouldn't you be able to work from wherever you are, experience life in a different place, or spend more time with your kids when you need to, work when you need to. I think, and I'm actually kind of hopeful, partly for selfish reasons, that we kind of see that version of the future come to pass. How does that sound?
That's awesome. I agree with you. Well said.
All right. Okay, now, are you ready for our speed round? This is trend or fad.
Go for it.
All right. Connected home fitness, trend or fad?
Oh, that's a trend. That was even a trend before we came into this pandemic.
ESG, trend or fad?
Important trend. Like you mentioned, we're seeing the new investors that are coming into the market, a generation of people who really care more so than ever about investing in what they truly believe and what they align with. I mean, I would love to see an ESG version of everything that's out there. I think that's a true opportunity, as long as there's sufficient liquidity. That's the key. But yeah, it's definitely a trend.
Pet ownership, or otherwise also known as pandemic puppies, trend or fad?
Unfortunately, I think that's a fad. Yeah. Unfortunately for the
Those
puppies.
poor puppies,
Yeah. I think we're going to need to invest in those amazing entities like VitaWe and others that help to shelter animals. I'm sorry to say, but I think that's more of the reality than, unfortunately, it's a fad.
And then finally, baking, trend or fad?
That's a fad. Yeah.
Yeah, early on, I was, I don't know about you, early on, I was really excited to not so much bake, but I did want to bake, but I didn't, but cook, actually cook meals and look for recipes and what have you. I think I've grown a little tired of that, and I'm back on frozen pizzas.
Yeah, same here. Same here. I totally agree.
Well, Laura, this has been awesome. I really appreciate your time. What's the best way for people to find you or connect with you?
There's a number of different ways. First of all, LinkedIn. Number 2, reaching out to Cboe. So just sending us an email at listings@cboe.com.
Fantastic. And thanks again, Laura.
Thank you, Ed. This has been fun. What a great way to start the day.
And thank you for tuning in to another episode of Trends with Benefits.